Hey everyone, it's Evan here from the Trade Risk on Friday, May 4th, here with a weekend market recap video. We're going to cover all the major markets, the current market environment, and then finish off looking at some sector analysis. So another volatile week out there for stocks. It was a second consecutive turnaround week. We saw the same behavior this week as we saw last week. So we saw early selling pressure in the stock market. Prices selling off, markets headed lower, and then right around midweek, we couldn't quite hold those levels, and we saw a rebound back into either positive, flat, or slightly negative territory, depending on what indice you're looking at. We had Apple also kind of helping fuel the rally to the upside, or the reversal this week to the upside. It was up 13% this week, which is huge, given the fact Apple is essentially a sector in itself because it is so massive. And for that reason, the Qs were the outperformer on a relative basis, thanks much to the weighting there from Apple. And finally, we're going to look at a market internal measure indicator that I love looking at. We've talked about it before here, but something that I'm waiting for to give us some signals, some transitionary out of this chop here. We're going to talk about that and what I am looking for. So hopefully you can stick around for this week's market recap video. All right, let's jump in here with the S&P 500. This is the cash market here, and we are looking at a weekly time frame. So each bar on this chart represents exactly 1 week worth of trading. You can see on the week, we finished lower 6 handles here in the S&P 500, 6.5 handles, down 0.25% on the week. So let us zoom in here, take a look at this week's trading. Again, another roller coaster, another fake out to the downside, a mean reverting market, a consolidating sort of sideways market here continues to be in play, especially on this weekly time frame. We have a series of lower highs being made and a series of higher lows being made. And take a look, we are still right in the middle of it. The past 3 weeks of trading, starting from the last week in April here, we had this nice kind of fake out to the upside. We tried to get going, tried to get that breakout moving on the upside in late April. That failed, and we closed exactly kind of where we opened on the week. Then last week, we saw this big kind of follow through initial move to the downside, and that was reversed, and we closed right back to flat. And now this week, we saw another kind of rug pull right out of the open, the early start of this week. We, in fact, even undercut last week's lows here under this 2610 level, and we made a new lower low here, or just a new lower price point, not quite a new lower low in this broad pattern. But we took out last week's lows and then reversed all the way back almost to flat on the week, well off of the lows of the session. So here in the big picture on the weekly time frame, nothing has changed structurally. We still have a series of lower highs and a series of higher lows in place, and we are still in a range bound sort of breakout mode, if you will. We are waiting for that breakout. We are waiting for that resolve out of this range. And again, this is taking place now over the past 3 months. So this is quite a larger pattern at this point that we want to be aware of, and that the short and probably intermediate term players now at this point want to be aware of. So big levels that we're still paying attention to now. We adjust the level. I think last week we talked about 2612 on the downside because that was last week's lows. Let's adjust it to this week's lows because we did undercut them a bit, right around 2600. I think it's just that nice round number, easy to remember. That is where we want to see support hold. If you are bullish, if we start to break down from there, we start to break this pattern of higher lows, then we have some issues in play. And then on the upside, it's really around 2710. You could use this week's highs right in here, depending on how aggressive you want that that breakout to be, anywhere from 2700 all the way up to even 2740 or so, somewhere in that range to the upside would start to resolve that pattern. Take a look at the moving averages here, dead flat, closing right at price. That is again another indication of a choppy market. So that is the S&P 500 big picture. Let's go down to a daily time frame now. Let's switch it over to the SPY chart here, and you can see, looking at the SPY ETF, there's a couple of other levels now we can start to pay attention to and start to pan out here, depending on how what your time frame is and how aggressive you are trading this near-term action. So again, nice rebound here, certainly by the bulls, 1.29% on Friday. Take a look at where we are, though. We're right back to 266. This line has been on my chart for quite a while here. We've been talking about it as a point of control level, and the market has this magnet where it loves to just kind of close right around it or trade right around it, and we are again getting a close right there. Moving averages here on the daily chart, very, very flat. They're below price right now, but still bearishly aligned. So just some mixed signals there in this daily chart, and here was the undercut of last week's lows. This nice kind of hammer here on Thursday. We saw this trade all the way down to 259.05 before almost closing back to flat yesterday and then getting follow through to the upside. Now, the follow through to the upside was nice, no doubt about it, but we still need kind of more follow through. We need to get through this heavy area here of around 266. We need to start breaking back up to the upside. We got a couple of trend lines that we can start to play with now, even if you want to take a near-term one right from the highs here from the 18th of April. So when we had that kind of fake out attempt right around 270, you can see we get that trend line that extends down from there, and we're just about, I mean, we're breaking out above it or really close on it, depending on how you want to draw it. So that is a level. You got the 266 horizontal level there. You got these moving averages here. So this is a confluence area, as it kind of has been over the past couple of weeks. So we're going to want to see if this breakout can stick. We want to see a follow through back above 267 or so, start clearing through this supply in here, getting above this kind of point of control and starting to break above some of this technical resistance that is in this area. That is what the bull case is going to want to see. And again, the kind of level on the upside ultimately is around this 271, which was the highs there from April. If the bulls can manage some more follow through early next week, that would be the first short-term level I'd be paying attention to. And then again, you have this just bigger, excuse me, broader trend line that extends down from the highs here, the all-time highs, that comes in right around this area too. So pretty significant, rallying right into resistance, and we do have flattening moving averages in the short term and really some of the intermediate term moving averages as well. So a flat market rallying into resistance. It has been a point of which markets tend to fail in this type of environment. Let us see if this time's different. Perhaps the fast move, the fast reversal on Thursday is enough to kind of spark and tilt the pendulum the other direction and can potentially break us out. So those are the levels I'd be paying attention to. Get above 267.50, get above 270 or so, then the bulls can start to build some traction. On the downside, it's this week's lows, just like we talked about, 260 or so. I mean, another, kind of, if we stick with that bullish thought process here really quick, one way we could look at this is if you want to call this kind of the lows here, or this second kind of bottom around here, we had this lift up out of that range, and then we pulled back and we kind of hammered out right around this 259. Is this some type of mini kind of higher low here, some structure that can be used in the bull case here? So we got kind of a higher low. We didn't get all the way down to retest this area, and now again, if we can springboard off of it and start to clear some technical resistance, you could make a case of that being a sort of bullish development. But again, let's not get ahead of ourselves. Every time we're trying to break out, markets are failing. So let's see if the market can do it next week. Otherwise, we need to be careful as we rally into resistance where we find ourselves right now. And 260 on the downside is going to be that first level of support to pay attention to. And if we start to take this out, particularly when we look at that weekly time frame again, if we start to take out this kind of double bottom, this undercut of the lows here right around 260 or so, that I think is kind of that new upper level, very important, crucial line in the sand. And I know the 200 SMA is kind of floating in that same area as well. So that's going to be the level you want to see hold if you're bullish, 260. If that starts to break, which if we do get another retest of that level for the third time in very short time, it has a much better chance of breaking this time around. So that is the big picture there in the S&P 500. What I want to move to now is indicator that I talked about at the top of this video, and It is the number of stocks hitting new 52-week highs minus the number of stocks hitting new 52-week lows, or looking at them separate, doesn't really matter. This is the graph here. Let's kind of make this a little bit bigger for us to look at on stock charts. So this top pane that you see here, the top window, this is the NYSE number of stocks making new 52-week highs minus the number of stocks making 52-week lows. And what's interesting about this chart and how I like to use this chart is for confirmation of directional support. You can think of it as an institutional support. You want to see where you want to see breadth expand, or you want to see the number of stocks hitting new highs expand when you start to get breakouts to the upside. You want to see it decline, or the number of 52-week lows pick up when we start to get those sell-offs, to kind of give you that confirmation of price action. And what we see now is still kind of the same thing in what we're seeing in equity markets, and price action is just a sideways chop fest. And it kind of shows itself here in the number of 52-week highs minus lows. Is look at this range over the past few weeks. It's just kind of petering around this, minus 100 to plus 100 level, most of it taking place, most of the activity here taking place below the zero line, which indicates that more stocks are making 52-week lows than are making 52-week highs. So if we are to believe in this bull case, if we start to see price resolve or try and attempt to make more resolve to the upside next week, we want to see, or I want to see, expansion higher in this indicator. Look at the levels that we saw back in 2017. This only goes back to July, but take a look. North of 200, close to 300. Ideally, it's 300 plus when we're starting to really get a nice trend going, especially at the start of trends. We like to see this indicator nice and north of 250 or so. And right now, we're still just kind of struggling around the zero line, which just kind of tells us, again, just more indication that not much has changed here. We're still kind of consolidating and waiting for the next signal. And on the flip side, take a look at this for the downside. Again, I tend to reference things always thinking about it in the long side because I know most people are long biased, but on the short side, it's equally as important. If we're starting to roll over here, we want to see a pickup. We want to see acceleration or an uptick in the number of stocks making new 52-week lows. So we want to start to see that expand like we saw in early February here, all the way down to 450 on the downside. And that can really pick up, look back to 2015, 2011, 2008, you get minus 1,000 readings when you start to get those really big sell-off capitulation type moves. So that's something I'm paying attention to. Let's see how this acts next week. Let's see how price action reacts. And when we start to get more evidence, either in this or price action, that we're starting to resolve the series of lower highs or higher lows, we want to see if this also kind of coincides with that same story. So something I'm paying attention to next week. So with that, let's get back into some of the charts here. We'll go to IWM next, which is the Russell 2000. Russell 2000 put in a nice move here on Friday as well, 1.25% to the upside. And take a look here, resolving this near-term channel. So this extension from the highs here on April 18th all the way down to today's action. You can see we're finally starting to break above this near-term trend line here, and we're also clearing above 155, which is just kind of a horizontal level that's been in play for the past five or six months or so. So that's a good development here. Nice to see us kind of thrusting above there. I still look at the IWM as kind of best in class from a technical perspective on multiple time frames. Don't like necessarily, or we didn't quite close above last week's highs. I would have preferred that to be, an even better signal or an even more confidence that the Russell can really start to break away here. You can see we're still we failed right at last week's highs. Still a constructive, a turnaround week. We held these moving averages here. We closed in in the upper end of this week's range. So it was constructive from that standpoint, but kind of like we've been talking about, we really just need to get some more follow through going in this market. So that's something we're going to want to pay attention to next week. But But I like the kind of double resolve of resistance here north of 155. If this market's going to stay healthy, we want to see IWM remain above 155 going forward. So that's the Russell 2000. And again, if this really does kick into gear here, we're very, very close away. We're 4.5 points away from prior all-time highs here in the Russell 2000. That can happen in, you know, a matter of 2 days if we really get the act together on the upside. So that is the Russell 2000. Let's finally go to the Nasdaq 100, 1.9% to the upside just here on Friday. And if we look here on the week, not quite as high, 1.72%, because we spent so much time in red territory. But take a look at the weekly chart now, really starting to come alive, a much better picture. We took out last week's highs. So the Qs here actually starting to warm up to be a pretty attractive looking indice right now. And again, Apple 13% to the upside. That helps quite a bit with some of these large cap techs that have been holding up well through earnings for the most part. And, you know, Apple certainly putting a nice weighting and helping this move higher. So weekly chart does look encouraging there. Let's go back to the daily chart here. You can see taking out these recent highs in here, and then here's your April 18th pivot right up here around 167 or so. That would be the next kind of near-term level. This gap is still open up here. This was kind of that island top reversal way back in early March. That still exists. So that's, you know, again, far away from where we are now, or, you know, I guess it depends on your time frame. But, you know, 5 or so points away, a couple of technical levels to get through before that, but something to keep in mind if this bull train keeps on going. So that is the market overall, a nice kind of turnaround week. But the market has really been nothing but turnaround moves. So it doesn't necessarily tell us that directionally anything has changed. We are rallying into resistance in the S&P 500 and the Dow. The Nasdaq and the Russell 2000 continue to outperform a bit now. So we'll have to see if resistance holds, what the market does next week. And I think everything we talked about in the last couple of videos, staying patient, sitting on the sidelines, being defensive, reducing size, all of that still very much applies to this type of market because we really have not resolved out of this pattern. It's kind of the same character that we've seen for the past few weeks is still present. So that is the major markets. Let's get into some other interesting things here. So we got the TLT, the long bond, closed flat on the week. Also really didn't make up its mind. It tried to push up a little bit, tried to push down, and ultimately just kind of closed exactly where it opened on the week. Now that is, you know, constructive in the short term. It is a win for the bulls given the fact that last week was a turnaround week for it. We retested this 117 level and closed strongly. We didn't give all of that back. We didn't come racing right back down to the lows. We held in there. So a little bit of confidence perhaps for the short-term trend, but still in a tough spot overall. Next up, if we go to oil, this continues to hammer away to the upside. I think it's up more than close to 20% already year to date. So it's been very, very impressive. And finally now we seem to be resolving the past 2-week highs here. We kind of had this little double mini top here in the short term, and now we get a nice strong close above it, 2.62%. So this party train to the upside continues, and you can see here on the daily chart now we had a nice kind of 3-day stretch, a little uptick in volume there on Friday's trading. So some good constructive action there for the bulls in oil. And next up, if we go to natural gas here, did not have the same strength as oil. This was down 2% on the week. We had a position on this. We closed out this position. We did our midweek video here. We talked about the position and what we were looking at. We ended up closing half of this trade off for a loss on Wednesday as we got this gap down and just uninspiring action. And then the rest of it came off on Thursday. So we booked a loss in this. Tried to go for that breakout. We saw the volume kind of increasing here, and we're looking at the series of higher lows here to kind of work against this 23 level, which coincides with around $2.80 natural gas. but we just couldn't muster up the strength on this specific timing. Perhaps it needs some more time to chop around, and when it makes another run at 23, it may be ready. But for now, 2% on the down week here does not look so pretty in the short term. Bulls are going to have to defend this level. They've defended it, this 22 level, but it's been defended quite a bit. So we need to see if they can do it again, and maybe another trade will surface out of that. In the meantime, it seems in the short-term direction is lower, but it's mostly range bound, so we really need to see how this reacts into early next week. So that's oil, that's natural gas. Next up, let's go to the metals, GLD here. So we talked about this one on Tuesday about how it got hammered at the first start of the week, and we need to see how it closed the week. Could it hold this level? And it just barely did, depending on how you want to measure this. But here's the weekly candle. Again, not a inspiring strength candle by any means, but we certainly did rally off of the lows, and we did manage to get a close that was not quite, actually, I guess it was a slightly, let's see, 124.54 was the closing price. 124.60 was the closing weekly price back here on the 16th. So it looks like we got a very marginal new low close for 2018, but you could make a case here that it is still holding this trend line. And if we go to the daily chart, again, by the skin of its teeth here, this 124 area, it's been down here quite a bit earlier in this year. It briefly broke up below it, and now it's trying to close back above it. So it's in a tough spot, gold, but you got a couple of things that maybe some mean reversion sets in here with the US dollar, which is completely ripped to the upside. So if you believe the US dollar can perhaps pull back here, you also have GLD at the bottom end of this range. So if you get the dollar to pull back, you got gold that might muster up a rally back into this range, and then we get kind of a false breakdown here right around that $1,300 an ounce gold level. So something to think about. No position here for myself, not clean enough, and the volume not heavy enough on some type of turnaround. I do still, I've been optimistic in the potential for gold to resolve this to the upside, but again, really need to just see the proof here, and next week I think will be an important one. Silver, on the other hand, did respect the lower bounds here, and this did get a higher volume kind of reversal, and it is further along off of these lows. Still not out of the woods by any means, but it came all the way down. It broke below this briefly, and now it kind of rebounded back into this range here. So silver's holding on to this 1530 or so, this support that has been in place since February. Let's see if it can continue to do that. And I think, as the saying goes, you want to see silver really outperform gold to get that kind of bullish sentiment going on GLD or the metals in general. So that, I think, covers everything that I wanted to. We still have earnings season out, so again, remember that we do still have a pretty busy week coming up of earnings season. I think it's the thick of it kind of next week, and once we get through that, then we'll be kind of out of the woods for the most part. There'll be some companies that still do report after next week. So let's jump into the sectors now. So individual sectors here, we'll sort these based on the weekly return, and on top this week is technology, up 2.63%. So very much kind of the lone soldier here, really doing a lot of work on the upside. Most of the action here this week was flat to negative. XLK was really a bright spot here, and again, we had some of those good earnings that were reporting out of this space. So XLK, nice kind of move here. Again, when we think about perhaps this trend line, even from the recent highs here, we're still well off of the highs on a relative basis. All the way up at 71 was where we made those highs back in March. But you can see, trying to resolve this kind of cluster of supply right in here. So around this $67, that's where I think you'd want to see XLK hold going forward if you're bullish on tech. If you want to see tech continue to lead this market higher, which is a good sector to have leading the market, then you're going to want to see this hold above $67 or so to the upside. That was your leader this week. XLB, just again barely flat, but it recovered all of the sort of early week carnage. You can see again undercut last week's lows, still below a 8 and 20 period, definitively below a declining 8 and 20 period weekly average there. So that's not the ideal characteristic, and you can see it's much lower here from its ultimate highs back in January. or early February. And if we can get this moving here, you can see we're still well below kind of this downtrend line that extends from the highs here. So, you know, it was number 2 this week, but nothing that inspiring in the near term action. XLE continues to kind of move sideways here. So it had this nice run up, this nice rally from this consolidation, and now it's kind of letting it moving averages catch up, basing out action up near these highs. So it'll be interesting to see what's next. Is it back up here around 78? Or do we retest and come back all the way down to $67? Right now, momentum, oil continues to be strong, holding up this space of the market. They have been really in the top industry, top sector performers is XLE over the past month or so, and they continue to stay that way. So for now, I think these are fairly innocent here until proven guilty of a breakdown, say below $72 or so. So those are the top 3 sectors this week. Rounding out the very bottom here is biotech, and biotech, we've talked about this level. Here's IBB, so here's the big market cap weighted biotech ETF IBB. And you can see we are back to testing this 101 level, a vulnerable area given the fact it's been tested many times. It's held every time it's tested it over the past 6 or 7 months, but one of these times will be the time where we finally break through this floor here, and then we really start to see some more selling or maybe some type of capitulation type of move. But tested it this week. It was down 3%, had a rebound on Friday, maybe Thursday again. It was the day that it ended up holding, but bulls are really going to want to see this get above and away from this 100 level and stop testing it. Vulnerable, and if you're a aggressive kind of short trader here, if we start breaking below this week's lows or even Friday's lows, might be something to look at for some downside momentum. XLV, so healthcare, which does you know, kind of hold in some of those IBB stocks that we just looked at. Minus 3% on the week as well. You can see closed below last week's lows. So a very different picture here for healthcare, right? We have S&P 500, we get the Qs, the Russell, you know, all those big kind of market indices closing at or near last week's highs. And we have XLV here closing at last week's lows. Again, a pretty vulnerable spot here. This $81 range has been support in the past. And then we have the ultimate lows right around kind of $79.50 from earlier this year. So in a tough spot, see how that acts. Again, if you're trying to short something, probably an area to pay attention to. And finally, staples on the downside. I mean, this has looked horrible for a while now, and it just continues to look horrible. We did get a bounce off the lows, but again, we took out and closed below last week's lows. We are, let's see where we are on the year here for staples. Down 12.6%. So I know some people will look at that and say, well, that's, you know, it's a defensive area of the market. It's good that it's selling off. 12% though, taking out last year's lows already, right? So 2017 lows were at $51.30. We are below that level, and in fact, below 2016 opening levels. So staples here, really seeing kind of that hit to the downside. Interesting, but just continuing to stay weak. Maybe if you're active, there's some mean reversion there, but still just in a very tough spot. So that rounds out everything that I had to cover in this week's video. Hopefully you guys are doing well out there. Thanks so much as always for watching. Every Tuesday and Friday, do the market recap videos. You can subscribe to our YouTube channel. Keeps you up to date every time we post one. So enjoy the weekend and talk to you next week.